Hey guys, Akil Stokes here. Welcome back to another episode of the Trading Coach Podcast. Today, we're going to talk about why starting with a single trading strategy almost guarantees that you'll be more profitable than trying to start with multiple trading strategies right out the gate. Now, before we dive into that tease, quick reminder, this is another video version of the Trading Coach Podcast. Welcome, YouTube audience. And although you can catch the audio-only versions on your favorite podcasting app, the video versions are only available in two places that I know of. One is going to be YouTube. Two is going to be Spotify. So those are your best bets if you want to kind of see the visual experience. Now, the question that sparked today's episode actually came during my double wake up this morning. And for you guys that are up to date on the show, you know exactly what that double wake up is. And I get a lot of questions on a regular basis, as you can imagine, but this was one that really stuck with me all day. And the trader asked this. She said, Akil, how do you really know what strategy to choose? How do I know what type of trader I am? I want to get started back testing, but there are so many patterns, so many strategies, so many options to choose from that I pretty much get overwhelmed. And first of all, hats off to you, trader. That is a great question. And it's great that you're even asking that question instead of going in blindly and blowing your account right away. Second of all, you're not alone. And out of the, nearly 1,300 episodes of the Trading Coach Podcast that we've done over however many years we've been running this show, I've been able to put together a few episodes that directly address that struggle. But one part of her message really kept replaying in my head all day, and that was the fact that there are so many patterns and strategies out there. There are so many options out there. And really the idea that as a trader, you want to explore everything. And this is very interesting because yes, thumbs up. I do think it's good to explore everything. And I personally teach that in how I teach traders. But at the same time, it can also be a negative if you spend too much time trying to try everything or you don't go about it the right way. And that's what we're going to talk about in today's episode. Now, I wish I remembered the name of this TED Talk, and if I do, I'll put it in the show notes below. But this question really reminded me of the general concept of that conversation. And this was during a period in my life where I was trying to be more robotic, more efficient, more productive. So I was kind of going on my unconscious incompetence journey of acquiring knowledge on those topics. And just to dig a little bit into that story, right? I've always considered myself to be a workaholic, meaning I don't think I'm necessarily the smartest. I don't think I'm necessarily the most creative, the most whatever. Obviously, see, I can't even think about words to explain it. But my superpower when it comes to becoming successful in really anything in life is my motor, my ability to outwork anyone, meaning that if me and you both started working at the same time, at some point you're going to take a break. And I'm just working until you take that break. And when you take that break, I'm going to keep working and I'm going to pass you. If we were to do a sports reference, as I often throw into these podcasts, this would be your equivalent of, let's say in soccer, a box-to-box midfielder, someone that just travels back and forth, offense, defense, and never gets tired. My youngest plays that position and he's quite good at it. If this were kind of an NBA example, I would be the LeBron James, where after 19 years of being in the league, maybe more than that, actually more than 19 years in the league, whatever, at the age of 42, right, he is still playing at a very high level and has shown very minor, signs of slowing down. He just has that motor to keep going. With that being said, as I got older and my life got busier, particularly with kids running around and growing the trading business from being just someone who traded in front of the charts to someone that runs one of the biggest trading businesses in the world, I realized that this workaholic mentality wasn't necessarily sustainable and that there just weren't enough hours in the day to get everything done that I wanted to. So after unsuccessfully creating an 8th day of the week or building a time slowing machine, I used my final option, which was go to my good buddy Jason Graystone, who is an expert in this field. And he really schooled me on the importance of two things when it comes to productivity and efficiency. One, the power of delegation, which is taking the task that you're doing and giving it to others. And the other was automation, which is creating a system around the daily consistent task that you have to do and automating it so that it does it without you needing to do it. And although there are a lot of places I can attack, for this specific Trading Coach Podcast episode, I want to focus on one single topic, and that is going to be the quadratic time principle, right? Sounds like something in an Avengers movie, right? Ooh, doomsday coming soon in a year, right? Anyway, so the quadratic time principle, which is a very fancy word, and I feel great about myself for saying that, is actually something really simple. So for you guys like me who have limited brain capacity, think about it like this. It means that the more things that you try to do, the longer everything takes to do. Yeah, see, again, I just wanted to use a big word. So for you guys that are new to the show, you would think I was smart and maybe you would subscribe and listen more before finding out the truth one episode later, or maybe 2 seconds later, as in the case of this podcast. But seriously, this is something that shows up in our everyday life, and especially, like I said, in my story, as I started to grow my businesses and deal with more things, right? So think about this as being like your never-ending to-do list, right? Where you have a to-do list. Mine is actually over there. I call it the Get Stuff Done list. And the more you progress, the more things get added to that to-do list. And the more things that get added to that to-do list, the more time it takes to get through that to-do list. And the more time it takes to get through that to-do list, the less things on that to-do list get done, which means they get added to the top or the bottom of tomorrow's to-do list. And that to-do list gets bigger. And you can see what we're dealing with, right? We're dealing with a finite period of time, right? 24 hours every day, unless we can create an 8th day or a time-slowing machine. But as we add more and more to that list, it's a greater time investment on our behalf, which means something else has to get sacrificed, and you end up kind of digging yourself into a hole. From a financial perspective, this is very similar to like credit card debt, where you build up enough credit card debt to the point where the credit card payment that you have to make really only pays off the interest and never touches the principal. So the next payment is even bigger because it's still more principal. And before you know it, you're paying a lot of money, but you're never actually paying the thing that you want to pay off down, right? And the scariest thing about this, whether it's the to-do list or the credit card, many people can fall into this trap by accident, and you don't really know you're in it until you're neck deep in, meaning it's too late. Another simple and somewhat painful example is this. I was just having a conversation with my wife the other day, right? Let's take emails, because I know everyone can relate to this, right? If you're anything like me, you probably get like hundreds of emails a day. And many of those emails are spam emails. Some of those emails are emails that are somewhat important. You should probably look at it, but not that big of a deal. And then some of those emails are important. So what people often try to do, and this is them trying to do the right thing, is they want to prioritize their emails. So you wake up in the morning, wipe the dirt out your eyes, you look at your 100 emails and you want to go through them and you want to sort them. Okay, spam goes over here, important goes here, less important goes there, that goes here, right? You spend all this time placing these emails in order so that now you can attack them and you make sure you check off the high priority task first, the low priority task second, and then spam gets thrown away third. And again, that is a great idea, right? Prioritizing your task by importance seems great. But there's a problem, right? When we're dealing with time specifically, think about how much time it takes to prioritize that task. What are you spending? 10 minutes, 15 minutes, 30 minutes just sorting your emails? Now, does that change anything with the amount of time it would take to go through your emails once you sort them? No, right? You're probably spending another half an hour still going through them. However, if you were to just go through those emails one step at a time, right, in the order that they come, right, trash, respond, important, boom, 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 you've still taken 30 minutes to go through your emails, the same time you would have before, but now you've eliminated that 30 minutes of sorting them, right? So again, us trying to do the right thing, sorting those emails, has actually given us a longer task than if we just kind of went through it the normal way. Now, finally, let's talk about how this shows up in trading, because this isn't the Email Coach podcast, it is the Trading Coach podcast. And we see this exact same problem when traders are trying to decide what strategy or strategies to trade, right? During that conscious and competent stage, right? That is the stage where we understand that we have to learn something, the right things, hopefully, in order to be a trader. We typically go down, and by we, I mean you and myself, because I was in this same boat as you. We typically go down two paths, or one of two paths. Path one is the trader locks into a single strategy. They play with that strategy for a good amount of time, and then they jump to the next one for whatever reasons. They don't like the strategy, it doesn't work, a YouTube ad catches their attention, whatever it is, they go from one strategy to the next one and they repeat that cycle over and over and over again for all of eternity. Path two is that a trader chooses a single strategy, but they endlessly attempt to modify it, to tweak it, to optimize it, right? This goes back to that podcast episode we had on how you don't need to search for perfection, because perfection is going to do nothing but waste time and money. Now, I know what you're saying. Akil, I went back, I listened to Trading Coach Podcast 90, Learning How to Learn, and didn't you say that your philosophy on how to learn the most efficient and productive way is to go through the entire course once, learn everything, and then go through the entire course again and focus on a single thing? Isn't that the same as jumping from strategy to strategy? No, it's not. That is a great point. Let me explain. I want to break this up into two phases. One is going to be trading, one is going to be learning, right? Trading and learning are two different things. When I say go through the course once, that is a journey of learning. We're not looking to trade. We're not investing time in any strategy. We are just, as I go back to the old analogy, walking through the dining hall or the buffet, and we are saying roast beef over there, hamburger over there, that chicken looks good, there's fish, there's desserts. We are observing what is available to us, but we're not investing any time in any said thing. I'm not grabbing a steak and eating it and then grabbing some shrimp and doing all that stuff. No, I'm just observing. So we are learning, right? We're not in the trading boat yet. The second time through the course, however, after we've seen what's available, after we've learned, that's when we're locking on a single thing and really investing our time in learning how to trade. So there's learning and then learning how to trade, two separate things. And what I want to do now is give you a little bit of a comparison between the trader that starts with a single strategy, invests in a single strategy, and a trader that tries to do multiple things. Because I see this a lot. Again, I've been coaching for 15 years now. I work with hundreds of thousands of traders, and you can imagine I've seen all types of stuff in the industry, and this is a common one. And hopefully this lesson will kind of relate to you so that you take the right path and not the wrong path. So for example purposes, we're going to try to make this as simple as possible. We are going to take a 2-year period, right? And this 2-year period will kind of come in different ways, but imagine just a 2-year period, January 2026 to December 2028. Now, trader A is the trader that wants to trade multiple strategies. So this is the trader that learns something and then bounces to the next thing for whatever reason, right? Let's kind of walk through their timeline. Let's say they spend 3 months learning how to trade, right? We're going to look at both of these traders as on the professional path. So 3 months learning how to trade, 1 month back testing, right? So we're at 4. But then because they don't really want to invest in a strategy, they get distracted by something else. They repeat this cycle over and over and over again until they're finally ready to trade by year 2. Trader B, however, focuses on a single strategy. So in their timeline, they still spend 3 months learning, right? We're going to make it the same for each trader. They spend 1 month back testing. Let's say they spend another month demo trading. I don't know if I have 3 fingers up. We should be at 6 by now. And then in month 7, they're ready to start trading live, right? So trader A isn't trading live until the end of year 1, right? So month 13, trader B is able to start trading live at month 7. So let's say trader B makes about 3% a month as far as their return on investment. And in general, 2 to 3% a month, you're considered a good trader. Many of you guys are probably scratching your head saying, wait a minute, I thought we were supposed to make $1 million in a month. that is an unrealistic expectation. Maybe if you guys are interested, we can do more episodes on realistic expectations. Just comment below, and if there's enough, maybe we'll do one. Anyway, if trader B, right, averages 3% a month on a $10,000 account, just to make the math quick, they're going to finish year one, remember they started trading at month 7, with roughly $12,000. And at the end of year 2, their full account size, right, should be around $17,000. So they made a $7,000 profit. Trader A, who started later, because remember they bounced back and forth and didn't actually start trading live until month 13 because they just couldn't decide what the hell they wanted to do, they're going to end their year 2 only at about $14,000, which is about a $3,000 difference, so a lower return on investment. Simply because one trader got the ball rolling earlier and then compounding got to do its magical math. Now I know what you're saying. Akil, wouldn't trading more strategies mean more money? Maybe, but also maybe not, right? More strategies means more trades, so that's more trade frequency. But it also means more exposure, right? That means more risk and more risk management complexities. And what I mean by risk management complexities is that if you're trading more, you have the potential to be in more trades at once. If you're in more trades at once, you do have the potential to win more, which is what everyone thinks about. But good traders are great risk managers, so we're always thinking risk averse. It also means that we have the potential to lose more, right? Think about it like this. If you have 10 trades on at a single time, and all those 10 trades come at 2% risk, or let's say 5% risk because you're a wild boy, right? You've got 50% at risk. 1, you're going to hit margin call pretty quickly if you haven't hit it already. But 2, if for some reason you hit a bad streak, right? Like the pound yen or the yen situation I told you about years ago where I lost about $30,000 pretty much in a week because I had 6 yen trades on at the same time and they all lost, you're going to be in big trouble. Hopefully, if I remember in editing, I'll kind of put in that maximum drawdown recovery chart that I showed you guys before. And what that chart shows you, for you guys that are listening to the audio only version, is it pretty much shows you that when you get into a drawdown, how much you actually have to return to get out of that drawdown. So I apologize because I don't know the numbers by my heart, but I believe if you ever hit a 50% drawdown, I think you have to make a 100% return just to get back to break even. And I can tell you that it's going to be very hard to hit a 100% return, as I just told you that good traders can average 2 to 3% a month. So pretty much you're cooked. Now, on the other hand, the trader that is trading less strategies, right? Well, because they have less frequency, if they wanted to, I still wouldn't recommend trading with 5% risk, but if they wanted to, they could trade with a larger position size because that overlapping risk is much lower. And here's the real kicker, right? This is where things get groovy. Do people say groovy? I don't think so. I dated myself. Note to self, please edit that part out or you will lose the younger viewers. Anyway, by the end of year 1, right, going back to trader B, the one that started in month 7, by the end of year 1, because they started trading live in month 7, they have 7, month 8, month 9, month 10, month 11, month 12. They have 6 months to actually start working on their next thing. So it is completely possible that trader B started trading live in month 7, started making consistent returns, and while they were making those consistent returns, were actually working and building on their next strategy. This is something that I did in my personal trading, and my mentor always told me, start with one strategy. He actually said one strategy, one pair, one time frame. But my philosophy was to start with one strategy, and while I'm making money with that one strategy and get to the point where I'm in that unconscious incompetent state where I'm running on autopilot, I don't really require a lot of brain space to kind of like look for trades and take trades. So what am I going to do with all that free time? Well, I'm going to start developing a new strategy or testing a new strategy. So it could be completely possible that trader B has 2 strategies ready to go by the time year 2 starts, which just increases that return on investment even more. Because now they're in the same situation as trader A, who has multiple strategies at the start of year 2, but trader B has multiple strategies at the start of year 2, while already having 6 months of profit from the one strategy from year 1. Again, starting that compounding curve quicker and quicker. So here's the point that I want you to take away from this podcast, which hopefully wasn't as confusing as it now sounds in my head as I ramble along. Trading a single strategy profitably is already hard, right? I should say profitably. That's the big part, right? It's already hard, right? Trying to trade multiple strategies at once, as you can imagine, is exponentially harder. 2, trading is not a get-rich-quick scheme, right? The real power in trading, and this is the secret that we just keep pounding into your head over and over again, is that the power comes from compounding, meaning allowing your money to work for you, doing the same thing in the market and getting a better result from it. And although we're not saying get started as fast as possible by like hopping in with live money right away, we are saying that the goal should be to trade live as soon as possible once you are ready. And there's no need to push that down the road. Again, if you look at any type of equity curve that involves compounding, even maybe in your personal investments, you'll notice that it takes a long time to kind of build that engine and build that foundation. And then after 2, 3, 4, 5 years, that's when you see things really start to take off. The problem is most people and most traders don't have the patience to wait 2, 3, 4, 5 years, so they never make it that far. But the quicker that you can get started, the quicker you can be at that 2, 3, 4, 5 year mark. So with all that being said, I am yet just one man, and this is yet just one man's opinion. I would love to hear yours as well. And there's 2 things I want you to do. 1, leave a comment underneath this video. Let me know, what path did you take? Did you start with a single strategy? Did you start with multiple strategies? And starting with multiple strategies, were you successful? Did you struggle? And starting with a single strategy, were you successful? Did you struggle? Give me an idea of kind of what your story was. I think it's great for our community of traders to hear. That way they have different options and different kind of opinions on the matter. Also, I'm gonna create a YouTube community poll here. So go over to the Post-Sider community part of YouTube. And if you can answer that poll question, that'd be great as well. That way we can kind of see where everyone lines up as far as single strategy, multiple strategy, what do they think is the best route forward. Also, going back to the comments, if you have any war stories or glory stories, I'd love to hear those as well. I always tell you about my time when Akil lost $30,000 and cried for a month and was depressed and wanted to throw everything out a window. Please share some of yours so that I don't feel as bad about mine. All right, something else, if you don't want to make Akil feel bad, you can do is leave this podcast a rating and a review. Hit that like button, that thumbs up thing before you leave. And of course, follow the podcast on your favorite podcasting app. Literally hit that button. Or subscribe on YouTube if you don't already. Literally hit that button. If not, Akil will feel sad and you don't want to feel guilty about that. Yes, I am guilt shaming you to do these things. At least I'm transparent. All right, until next time, plan your trade, trade your plan. Take care.